All right. Thank you, Dave. All right. So, this is a subject I think everyone loves, candlesticks. I know when I do a webinar, a lot of people sign up. Everybody's interested in candlesticks, but how do you use them effectively? And that's what I'm going to show with you today and to cut through the noise. Um, just tell you a little bit about myself, where I'm coming from and where I've been and what I've been doing here. So, as it says there, in the 1980s, I asked, how do you trade stocks? I think a better question is, right, what's the difference between a stock and a bond? What is an ETF? I didn't even know if the ETFs were around when I started. I know you could buy mutual funds, but I don't think there were ETFs. And so, through some trial and error, some hard knocks, I eventually, in 1994, started a company at that time. First pioneered online trading education. There wasn't any education at the time back then in 1994. There was no internet. It was just starting out. So it was in the right place at the right time as far as to get involved in the markets. And it started out with a fax letter service. I don't think anybody has fax machines anymore. It's probably in the archive somewhere. This where how people used to communicate was I had the first online chat room. You could only type. There was no talking. Eventually, you could talk. And I had several offices around the country, so people would come to my New York office and trade live there with me. And I had others in Irvine, California, and in Vegas, and Miami. And eventually, the internet became what it is today, and having brick and mortar didn't make any sense anymore. Recorded seminars. Master Trader used to be a brokerage firm. And eventually, this internet evolved into the monster that it is. I say monster because it just like AI, it's an evolution, and things, environments, the world changes. So the brokerage firm that I started, which was the first for online active traders, eventually couldn't compete with the Schwabs and all the others, which basically were telling everybody stay away from that active trading, you lose money. And now you can't turn on the TV or CNBC without an advertisement. So I sold that firm. I sold all the old recordings from the old company. Somebody who couldn't figured it out themselves, I suppose, or too lazy to do it. I don't know. Um, they were willing to pay for it. So I said, here's all this old stuff. You can have it and recreate it for what I teach today at Master Trader, um, with a lot of new information, which is some I'm going to share with you. Used to do trading challenges, went to these shows and did live trading challenges. So on display for the world to see. And eventually, and they still do these trader expos, is what they're called. But they became an expo for software companies and brokerage firms, so stop going. So it's been 30 plus years helping traders think clearly and act decisively with confidence, which comes in time, folks. You have to learn a mythology. And, this AI thing, it's not something new. I wrote an article, which possibly I could share if that's okay. I wrote an article because this AI evolution and automated trading is not something new. Back when I started out, and I just mentioned this in the webinar that I just did one just before this, MT Live. Um, I think it was in the early 90s. It was called neural networks. And it was the same idea, program in there, different criteria, and it will tell you when to trade and what's happening in the markets. So AI is, I'm sure, 100 times better than at it, but garbage in, garbage out. And so how are you going to manage the trade? How are you going to get in? How are you going to get out? Essentially, is, tell me what to do, which that's what my newsletters do. I tell you what to do, when to do it, when to trade this or that. Or I can teach you how to do it. And if you want to learn how to do it, that's what I'm going to share with you. But I have students that hedge fund managers, market makers, specialists, prop traders, and of course, retail traders and investors. So I've traded with, taught all of these people. And some of them are very well known companies, which you can check out on my website if you choose to. And it's a testament to a lot of years of educating individuals to be successful in the markets. These are books that I've written, so you can check them out. Good information there as well. So let's cover some basic stuff. Let's really get down to it because, starting out, whether it's indicators, it's my kind of my pet peeve. Why am I angry at the indicator salesmen or indicators themselves? Because they're so misleading, and candlesticks are also. And misleading in what way? They're incomplete information, which I'm going to, put together, like how to put these together. But you can't be just focused on these names. Right? Can't a few candlestick patterns that are going to tell you when to buy and sell. No, it doesn't work that way. A hammer means it's going to go up, or a shooting star. Yeah, and memorizing them, forget that. I don't need to know any names. At times when we use names, say like a Head and Shoulders top, you know what that looks like. So it's kind of shorthand as to us communicating with each other. Hey, here's a Head and Shoulders top in XYZ. Oh, that's a distribution pattern. It made a new high failure. It retraced deeply down to major support. It has a neckline that if it breaks that, it should go lower. It created a void. So what's a void? Well, that means there's no support underneath it right now, sort of like what these markets have done over the last 2 weeks, where they've shot up a tremendous amount in a short amount of time. There's very little support. So as the market starts to go down and traders look like, where am I going to buy? There's no reference point to the left. And they get into, oh, let me draw a trend line, or maybe see if there's a Fibonacci retracement. All of these types of esoteric analyses. So messages are oversimplified and dangerous. And this is what you usually, whether it's in a book, trading forums, webinars, the thousands, tens of thousands, hundreds of thousands of YouTube videos of people that are great at making videos. I mean, if these people could actually trade, right, or understand, but they know how to say, hey, that's support, that's a candlestick pattern, and explain it. If they can get enough likes or views, they're making money, right? I don't know how many videos have to be watched to make some money doing them, but it is incredible that some of these people, what they're doing to get all of these views. So candlesticks, they're not about predicting. You have to look at these things through the eyes of this drawing tool here. I can do this. Let me see. I'm trying to figure out how this works. Laser pointer. I can't figure it out. Anyway, I wanted to point, but sorry, folks. Think about think about your charts as a reflection of what other people think versus the names of a candlestick pattern or even a Head and Shoulders top and so on. These patterns reflect to us what happened in the past. And that reflection of the past, right, pattern recognition tells us a probability of what is likely to happen in the future. That's why we look at charts. It's about seeing patterns and how they evolved and what happened after that pattern happened. And that suggests to us that that pattern, looking like the other one, should result in a similar outcome. That's the whole idea behind technical analysis. In essence, it's a self-fulfilling prophecy. You can try and make it more sexy by talking about lots of different indicators. Um, However you want to approach it. The way I approach it is if I can put together multiple time frames, maybe a 50 MA on a daily chart, some basic stuff that I know institutions are looking at and other traders are looking at, that we are going to work together to make that trend continue in the same direction. In other words, if you're an intraday trader, and if the 60-minute chart is pointing up and the 15-minute chart is pointing up and the 5-minute chart is pointing up, you have traders using those different time frames that are thinking prices are going to continue to go up. That's one piece of information. It doesn't tell you what to do and when to do it or how to manage it. It just tells you that the probability is that it's going to go up, which raises a question, well, up to where? Where's the next support? Where's the next resistance? So there's a lot of things that need to be put together. And it's a bullish pattern. Engulfing pattern means very little without putting it in context. So I'm giving you some guidelines. What am I going to put in context? Multiple time frames, support, resistance, relative strength and weakness. So the same pattern can mean different things in a strong trend at support or at resistance. Look, none of you that are here want to follow anything blindly. That's why you're here. You're gathering information so you understand what to do. You want to be successful. You want to be able to do something with consistency. And so by putting together trend, structure, you say, what structure? Well, different patterns form in different ways. I was just asked in the other webinar that I did, what do I think about Heikenaki something or other, which is a form of a candlestick that compresses things to not wiggle around so much. That's my explanation, right? Take some noise out of it. And people, try to reinvent the wheel. But the thing is, if that works for you, that's fine. But it's about understanding that structure in a way, however you're going to look at it, so that you can use that, as it says, in multiple time frames. Okay. What actually works? Well, it's a real-time language of price action. And it's not as isolated signals. What does that mean? Well, it means that one bar doesn't mean anything. We have to put this together in a structured manner so that I understand what happened in the past, what's happening right now, and the probability of what's likely to happen. And once I've determined that, I can place a trade along with proper money management. So where are the key levels? There's nothing proprietary about this. Right? And I've said it once. If you've been in any of my webinars, you've heard me say it thousands of times. Just look to the left. Where's the swing high? Where's the swing low? Where is there some support or resistance? And putting that in the context of a trend. Once you've done that, you use bar candles. I call it bar by bar logic. Where did I come up with this idea, bar by bar logic? You know where it came up from? Getting in a trade and being like so nervous, what's going to happen next? It's like, Greg, you have to be able to manage this without the fear or the greed or just nervousness. I thought, well, every bar has a meaning. Put that particular bar in the context of the trend, support, resistance, multiple time frames, tradable voids, relative strength and weakness, what's happening in the broader markets, and come up with an educated, informed, logical bias about what's happening. Did that candle change anything? No. Well, what are you getting excited about a red candle for? Well, it's kind of big or it's got a tail on it. Does that one candle really change anything? Yes or no? That's what we're after. Is it a yes or is it a no? So let's just cover some really basic stuff. I'm not sure where anyone is within the group here, so I'm just going to cover some really basic stuff really quickly. This is how a candle forms. Right? High, low, open, and close. The close is above the open. We see it as being a positive, and if that candle closes above another candle's high or the prior close, that's positive. And I set up my watch list that way. What's the change from the prior day's close? What's the change from the open? It's really simple. No, you don't need scanners for this. But if I'm looking at a sector that's green on the day and I see one stock that's in there that's above the open and above yesterday's close, I'm looking at that one before I look at the one that's below the open and below yesterday's close. Pretty common sense. So these are bar charts, and they can be either positive or negative, red or green. Is it closing below the open? And where is it from the prior high? And let's try this laser pointer one more time. I cannot get this damn thing to work. Oh, there we go. I'm trying. All right, great. So high, low, where's the close in relation to the high? And is it below the open, and where it is in relation to the low? That's what we're looking for when we do this. All right, let's go to the next one. So real easy. Is it a big candle? Is it a little candle? What's big and what's little? Well, as I look at these, it's just visual. Are they big? Are they big candles? Well, it just jumps out at you. It's a big green candle, big wide range bar. Is it a topping tail? Did it go up and back down again? That's about retracements. And retracements went up and down. If you're looking at a smaller time frame, you got a bunch of bars up, it stalls and it goes back down again. So we have to put these in the context of the trend, support, and resistance. Now, I like to see big ranges or range expansions. They display emotion. If it's a bottoming tail one, it went down and came back up again. If that happens where it broke down under a base and came back up, that's great information. If it happens within a consolidation and it's a breakout bar, there's you got great confirmation. If you get a big wide bar as it breaks down under a base, that's your confirmation. Again, what is the trend? So we have to put together the other parts of the equation: support, resistance, trend, multiple time frames, and so on. And that is what puts the odds in our favor. All right. So what I've explained to you in words, here we're looking at that in a picture. And see here. Got it. All right. So sideways, gap down reversal in an uptrend. That's a great setup. Great setup. Odds are it's going higher. The trend, as you know, is your friend. And in an uptrend, is it at support, gap down reversal with some kind of shakeout? I don't know. You can call this whatever it is, a morning star or some fancy candlestick name. That's why I said call it whatever you want. It says it's going up. Again, this is in context of an uptrend. And it went down and went up. This is really about retracements. So as we look at different candlestick arrangements, as you change time frames, you get different pictures. What's here is over here in a smaller time frame. It just went down and it went up. It went down and it went up. Now, if they're wider bars in an uptrend and got room to go up, these are good setups. 1, 2, 3, 4, consolidation, continuation, wide bar up. It tried to stall. It went down and it came back up. This is bar by bar analysis. Again, down and up, retracements, a failed sell setup. Why would somebody do a sell setup if it's in an uptrend? People do. It's supposed to fail. These red bars are supposed to fail, not follow through. And this is a 1, 2, 3 pattern. We trade this almost on a day-to-day basis. because we're always scanning for wide range bars because they're power bars. Now, as we group these candles, as we group them together, gets more and more information coming together that's powerful. So grouping of these candles gives me confirmation of what's happening. The more candles that I can put together, the greater the probability. So if we were to, and I'm stretching here, but what if I said to you, this is a Head and Shoulders top? I know one of you are going to say, but Greg, the middle candle, there's no head. It didn't pop up enough. But I want you to get the essence of what we're talking about here. And it went up, it tried to go up, it pulled back, it tried to go up, and it came down again. There's distribution going on here. Is it extended within an uptrend? And it's the opposite of that. The more candles you have that create a support area or a resistance area, the greater the probability of this, if it breaks down, following through. If this is in a downtrend, you've put more odds in your favor. If this is an uptrend, more odds in your favor. If this has been going down, say like software stocks have been going down, they're down what, about 35% or so? If you look at the index, and some of them are down even more than that. If they start going sideways and start forming a pattern like that, they're starting to bottom out. This isn't rocket science. It's relatively simple. Just you need to be able to put this together, right, in a systematic format. Right. So this is the pattern that I just showed you, the 1, 2, 3, 4. It's one of my favorites. When it sets up, I might click the wrong thing here. Am I still showing? Mike, share. Let me get this back up, folks. This little control panel, I'm not used to it. All right. There we go. Okay. All right. So as we see this kind of a pattern bottoming out here, wide range bar up, power bar, inside bar, it rests. Be a buyer. And that's the next bar would be ideal. And usually what it does with a pattern like that. Remember, this is an igniting bar. It's starting to move up. This bottoming tail bar is a correction bar. And when a movement starts that has momentum like this is what I look for, how to get on board. So we look for patterns. We either look for we look for breakouts or we look for pullback patterns. Well, sometimes they don't do either one. And what you could utilize is a correction bar, which is defined as when you get a couple of bars going sideways, and it could be 3. I'm not looking for exactness. It could be 3, it could be 4. I think it breaks down under the lows and it pops right back up again. What does that mean? Remember, we're looking at these charts from the point of view is that they're communicating to us what other people are thinking. What that means is that there are institutions or traders that have bids below the market. They're saying, this was strong. I want to get on board. And I'm willing to maybe even buy it if it keeps going down. So here's the mechanics of what happens. If you look at a level 2, and I did many years ago, you see that there are bids here, there's bids here, there's bid here. People are trying to buy cheap, right? So the ones that are bidding here, they get filled. And now it starts lifting up. Those that are looking at a level 2, they see red, 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 red. Now it starts turning green, the time in sales. The guys down here saying, you know what? I'm not going to get filled, fear of missing out. I better take the offer. And they drive it right back up again. Now, the ones that didn't get filled or they didn't take the offer, now they're thinking, this thing's going to go up. It was strong before. I better buy it above the highs. That's what I'm looking for. This is the correction bar. There's different variation of it happens near the beginning of the move, and I call it a money bar. Why? Because I've never seen one fail. Never. It doesn't happen all the time, but what I'm telling you here is how to understand the movement of what's happening there and the mechanics of what's going on under the surface. All right, let's look at a few examples. We got to go through a thought process here. Strong move up. I captured this yesterday. I don't know what it's doing today. It may be down, it may be up, it may be going sideways. I know it's going to report earnings on the 30th. Strong move up. What am I looking for? Apply bar by bar analysis. Multiple time frame trend. I know this is up in multiple time frames. How do I know that? It's got a rising 20, it's got a rising 50, and here's a 200. These are all related to other time frames as I view them. This is the weekly and this is the monthly. So this is up and it had a power move. It's pulled back to converging moving averages. It's a bottoming tail bar. Bottoming tail bar has to be put in the context. So multiple time frames alignment. There's been a power move. Is it in an area of support, price support? Yes. Moving averages are subjective. Are they aligned? Yes. Is there liquidity? Yes. Look at the volume. Management. How are you going to manage it? Well, it's going to have to trade above a prior bar's high. The way it came down is not ideal. There's some resistance there, but the weight of the evidence is that this is go up. If it had another day sideways, even better. It begins to build a little bit more of a base. So I don't know what this is doing today. I can actually take a look. Is the symbol on here? IRM. It's great. It gapped down this morning and it's green on the day. It's up here. So it's getting even better, but it's going to report earnings tomorrow. So, earnings report, I think I have to pass. But I have a bias. What is the sector doing? My sectors are in here. It's in the real estate sector and it's a REIT. Probably has a decent dividend. It's a great setup. Earnings are coming out and that creates uncertainty. Again, we're putting bottoming tail bar in context. Power move, bar by bar analysis. There's my bottoming tail bar. It's a extended, but a power move. This gapped up on earnings. Great. It's cleared resistance. Price support. No. Moving averages lined up. No. They're way down here. This is how I look at one of the ways to measure extended. It's far from the moving averages, but it's supposed to be on a power move. Liquidity. Not that great. Could be okay, but I bet a share size is a little smaller. Sector, industrials, they're not doing so good today. Last I looked, they had a rounding top, but VMI today is inside day, consolidating, doing nothing. I want to see this correct a bit more. It's not prime yet. Another bottoming tail bar, very different. That's why they have to be put in context. Power move down. It's under the 200 MA. Multiple time frames are pointing down. Price support. Now, I don't see anything to the left. Liquidity, plenty of liquidity there. Sector, unloved, hated, by the way, even though with all the wars going on. What do I do with something like this? Oh, first of all, what is it doing today? RTX. It's down on the day. It's red. But you know what I did in the other presentation? I set an alert above here because if it pops up, it'll be good for a put spread. It's not a directional trade. That's my bias. It can be traded, but not directionally, not for me. It would have to have a wide range bar up. It would have to do something more than what it's doing. But if it was to turn around, and I tell you right now, it's down on the day. It's a red candle that opened here, and it's right now down here. But it turns around tomorrow. If there's premium in the options, we'll be looking at this for a put spread in the green room and in the weekly advisory letter. All right. So a little overview. How do I put this in the context of Master Trader Technical Strategies and MTS? One candle, it can mark the exact moment of a turn. But it's not enough for you to act on anything. So you have to group these. You have to look for a grouping of candles. What is the expectation? What is that communicating to you? What we're after here, as I said, is the defined support, resistance, trends, multiple time frames, relative strength and weakness. So even if something like the prior chart was weak and in a downtrend, if it's extended and it does something, what is something? Some event like maybe RTX would gap above the high of that red bar, where I would then support a belief that it won't go down below today's low in the next few days. And if I could find a zero time to expiration put spread, that would be a super high probability credit spread trade. We look for those on a day-to-day basis. There's credit spread trades every day, 0 DTE and SPX, SPY, QQQ, and 3 times a week in several of the Magnificent Seven. So that is one of our go-to trades. Candle grouping shows a commitment. It says from one side of the market, right? Not just one bar. And you have to align it, which I've said multiple time frames here, putting together the other concepts, strength, weakness, what's the broader market doing, market internals, into market analysis, money management. And this is what sets up powerful reversal signals and continuations. Right now, the market and a lot of stocks are showing a lot of indecision. And it is frustrating, especially, we know the news that's come out. There was news earlier today what the president said, whatever he said, you know, and, started things moving lower, but it's relatively choppy because we've got these earnings that are coming out after the close. So we can scan for different setups and we look for those wide range bars and we look for, say here, breakout failures, right? Got scans for that, breakout failures, group of candles. And I showed you some examples where it went up and it went back down again. I'm looking with a breakout failure, just like I explained RTX. It could be the breakdown failure, meaning it gaps above that bar's high. What is going to be the vehicle for me to use to make money in that instrument? Different setups. One could be a put spread or a call spread. Another one could just be I'm going to buy that stock. Depends on how it sets up. And so, do I have multiple time frame alignment? So breakdown failures do I get a breakdown failure with something that's been going sideways within an uptrend in a sector that it is being loved under accumulation by institutions? The more things I can put into favor, the greater the probability of that trade working out. Stop loss. What is the stop loss triggers at key levels? You know what this is? This is a concept I've been teaching for decades. Today they have a fancy name for it, liquidity hunts. It's it's where the prices we're going up, they have a deeper retracement, they take out the lows and they snap back up again. Called a greater than 100% retracement. It exhausts, right? By taking out those stops, it takes out that area there and it just flips right back up again. And it does set up a very short-term trade. And it happens at, I call that major support, which is the low prior to a higher high, where it takes out resistance and it flips back down in the other direction. Now, trend trumps a single candle. The meaning of that is, as you look at individual candle, it may be a big red candle, it may be a big green bottoming tail or topping tail candle. You can't act on that in of itself. You have to put it, what I've explained to you, in the context of the structure, support, resistance, trend, so on and so forth. Now, a little key here with wide range bars. A wide candle in an extended trend. What is an extended trend? Well, something like semiconductors that have been running higher, higher and higher. What you see happen, and this should drive home why these candles communicate to you what other people are thinking. And I'll tell you how I came across this idea, right, of wide range bars ending moves. And some prices are going up and up and up and up. And then there's a wide range bar, fear of missing out. Everybody jumps on board. And you've got this big range expansion candle. Well, going back to my early days, I thought to myself, Greg, you sold low of the move again. You should have got out. You should have adhered to your stop. How the hell did it start going up after you sold? Market maker must know what I'm doing, right? There's all these thoughts that come in your mind about it. Somebody, something's working against you, or somebody knows what you're doing. They can see my order. And then by reviewing charts and charts and charts, I said, it's an exhaustion move. This is what an exhaustion move looks like. This pattern represents throwing in the towel, even though I thought and others thought, well, I wasn't by myself. Right? I by myself could do nothing. But when a group of traders all act at the same time, it creates a wide range bar. Now, did that wide range bar end a move or did it start a move? It's a key point. Okay. Now, if what I taught you got some juices flowing to learn more, this course that I created at the end of last year, bar by bar analysis, it's great. And I've got lots of videos in there explaining charts at the time, bar by bar analysis, money management, these different setups, how to put them together for intraday trading, for swing trading. And just going through this and watching it over and over and over again will guide you as to what's happening on an ongoing basis. So the first thing is to find an opportunity. What happened in the past, what's happening right now, is it showing relative strength and weakness? Is there a tradable void? Right? What is the trigger? Where is my stop? How should I share size it? All of this you learn in that course, and I put that together. It comes with monthly coaching, which I'm going to do a coaching session next month. You get lifetime access, and the great thing is you might want to consume this course in a weekend, which you probably can do, sit in front of the computer that long, or you can just come back to it, rewind, watch a half hour a day, every day, reinforcing it over and over again, making it second nature to you. And to gain success, I'm available through emails. I often send videos to students and subscribers that ask questions about different setups, and whether that's a currency pair or whether it's a futures contract or whatever it is. And I'll give you a response to that. And if you want to check out our memberships, right, whether you want to join the green room, the advisory letter, or the weekly options trader, you can go to that URL, and any of those are 2 for 1, 50% off, and 45% off this course at checkout on the bar by bar analysis. And that is my time.
Hey, Greg, our next speaker is not logged in yet. If you had anything else you wanted to share, you're more than welcome. So I can use this one at this time. I think I've asked you this before, and you've been kind enough to do it. So if you want to share some charts, I put your links in the chat. Okay, I appreciate it.
Not a problem. And I would also like to share this. You can go to my blog, and I don't know if that allows me to put something in there. I can put it over here if you want. You can put it in. Uh, anyway, I wrote that last night. I think it's fitting. What this screen is that I'm showing you, it's what I use for what I call a top-down approach. What's happening uh, in different sectors of the market? So we've got lots of different ETFs, subsectors there, and I've got little scans within there. And these are some basic stuff. I have more extensive ones, but in any event, I just want to find out what's strong or what's weak. It's real easy to do. So I see healthcare plans have been strong, and then I've got these linked into what stocks are in there. And then we can start looking for wide range bars just by flipping that like this. And this is something that I share with any member or student. And so we can look for, right, wide range bars, or maybe I told you 1, 2, 3 patterns. I bet you there's no 1, 2, 3s in here. And I say that because this sector broke out. And what I've done on these charts, see this is black and this is blue. This scan for wide range bars I've applied to the chart. So it marks that. So visually I can see, right, this was a wide range bar there. It reinforces my concepts. And this went, look at the E, this went down on earnings and it flipped up the next day with converging moving averages. That's going up. This is a pseudo 1, 2, 3. The 2 bar should be inside, but let's bring some common sense to what we're doing here. And look at this one, gap reversal. Now, there isn't a wide range bar yet, right? So it isn't, we don't have that wide range bar ending, but it's coming up to a resistance area. But let's see if we can find something within a scan. We could go to a different sector. Regional banks. This is sorted. There's nothing in there. Let's go to the next one. Electronics and computers. So there's many extended charts like this. Is there anything that maybe is a 1, 2, 3? No. Is there any bearish 1, 2, 3s? No. Any bullish 180s? No, because things are consolidating. What do we have here? A bottoming tail bar, maybe? Nope. It's this one here. Now, what jumps out at me? First of all, I'm not sure that this isn't a bad tick. I'd have to look at an intraday chart. I think that's a bad tick. But what catches my attention here with this stock, first of all, it's not going to report earnings until next week. It's in a good sector. Look at the retracement. If this was a bottoming tail bar, it'd be great. But it gives a clean breakout. So what I'm going to do is I'm going to set an alert like that. And I'm going to let it start to break out because I don't want to get caught in a failure. Sometimes these consolidations go on too far. This one hasn't. So this could break out and keep going. It's got room to go up. See the gap down. Let's look at another sector. Let's see what's doing well today. Why would semiconductor sector do well? You see, this is my starting point. What's doing well today? Semiconductors. But it's so extended. This had like a tremendous move. Right? 54% move in this particular semiconductor ETF. This is what's called a Bear Island reversal. It gapped up 2 bars and it gaps down. It's coming into resistance. This is showing some pre-market data, but I'm going to get rid of that. So I look at these intraday, and there's your weekly chart. What I'm going to be looking for in this isn't an uptrend. I'm not fading this from a swing trading perspective, but on a 65-minute chart, it's up at resistance. Now, if we could get one of those breakout failures, we just might be in store for this to follow through lower. And that is not happening. It's actually quite positive on the 5-minute chart. So I do these swing trades if they line up the way I showed you in my presentation. But for intraday trading, this is at resistance, so I'm not interested in that. But we could start looking for individual stocks within there. and see if there is something maybe pulling back to the 20 MA. Not one. How about touching the 50 MA? Not one. Breakouts. It's not a clean breakout. So it's coming. There's a breakout. Intel, amazing, but it's extended. I can't do it. I cannot do that from a swing trading perspective. Nope. Nope. So there's still strong stocks within this particular sector. You might say, well, show me something that's doing terrible. I just sort this in the other direction. Marijuana. How many times has that failed? This sector, medical devices, is just getting creamed. This looks like it's going into capitulation mode now. It's been trending down for a while. And this broke down. Now I'm going to go back to the weekly chart. And look, this has got so much room. This is a void, folks. There's nothing here because of the way that went up. Now, how do I get on board this if I'm not in it? Well, I should have been in it already. I have to wait for a pattern, which I do not have. So there's nothing I can do. I have to pass. But is there some type of a setup within the sector? I could look for bearish 180s. Well, here's one. But it's in an uptrend. No. No. How about, bearish 123? There aren't any. How about a topping tail? There aren't any. How about something that's at its 200-day moving average? No. So all I have to do is click. This one just went these one are losing their 200-day. All right, so that's what that means. L200 means it lost its 200-day moving average. Now it's down 3 days in a row. Nope. It's going to report earnings next week. Broke down. So these put me in the ball. So here's one. Now, I'm not familiar with this. First, I thought maybe it's a biotech, medical instruments. So what you want to look for with this, see, it doesn't have weekly credit spreads. It's only got monthlies, and it's a $10 stock. If this was a $100 stock, I would be looking at this and I would say, hey, Dan, see if this has premium up above here. Loaded the sector. It has premium above here to do a call spread. And it's only got monthlies, and we're not going to find anything. So there's a lot of searching for different setups. A bear shock, that would be like a breakdown failure. Bull shock, no. So you have to go through these. Wide range bar on here. Breakdown healthcare is being hated right now. Wide range bar, bearish wide range bars. I just got to click that, and it shows me. Nope. Medical devices. This would be good for a call spread. It's only got monthlies. Not that you can't do monthlies, but the shorter time we can get to expiration, the better. This is moving down. We could look at the weekly chart. When I see something that's running like this, is there any price support to the left? And it is coming down to some support. See on the cursor there. So $60 is a whole number. I'm betting there's a whole bunch of, I'm going to send an alert there. I'm betting that there's going to be a lot of puts being bought there. And so this isn't very active as far as options go. It's only got monthlies, but one of the things that I will look for is, does it have high open interest at that strike? So this isn't an active options company stock, but sometimes what you find at a whole number is that the volume at a whole number strike and the open interest is huge. So when prices come down and they become climactic into that area, there's going to be a bounce. And then I watch it for an intraday trade. All right, let's see the next one. This is resistance, but it isn't damaged enough to consider a call spread. I'm not doing anything with that. Breakdown. We already looked at that one. Baxter breaking down. It's on support. This one is somewhat more interesting. Earnings tomorrow. So you have to go through the checklist, which I covered with you. Is there momentum move? Is there liquidity? What are the moving averages? What is the trend in multiple time frames? Are earnings coming out? You might come across a pattern that looks very attractive, but it's going to report earnings tomorrow, and you don't want to get blindsided. Look at this one. Look at this one. It breaks out on earnings. It looks great. This, I can't remember the symbol. It was associated with this. It got decimated when this went down. So you got to know when earnings are coming out, because it could work in your favor, and it could be very painful, meaning a lot of lost money. And I've done that, been there, done that years ago. I can remember buying a particular stock and then finding out it was going to report earnings. And I've gotten lucky where it gapped the next day, and I've been unlucky. So through that experience, it ingrains your methodology that you go through the checklist. I'm looking for sectors. I'm looking for stocks within the sectors. I'm looking for patterns. I'm looking for multiple time frame alignment. I'm making sure I'm not going to get blindsided. Let's oil and gas equipment. This is extended, but oil is moving up today, and energy, you can see USO up here. USO, that's broken out above the highs. And we could look at XLE, which just is coming up above this resistance area, and we could start going through stocks within there. See if there are any wide range bars. PSX. Now, PSX reported earnings today. Wide range bar, igniting. Let's leave it alone. It's 215.
Sounds like everything's working.
Say again? Okay. All right. Here's a wide range bar, 215. I don't know that it's going to look like this at 4 o'clock. Have you ever bought something at 215 saying that looks great? And at 4 o'clock, this might be a giant topping tail bar and you're holding a loser. How do you manage that? Just cut it loose? Hope mode? So when you see a bar that's forming, whether it's a daily or whether it's a 30-minute chart, make sure the bar is done. So if this closes like this, ideally it'll form a consolidation tomorrow, and then I'm going to look as this is a long trade. So for now, all I'm going to do is I'm going to set an alert at that high. Earnings are out of the way. This one's already on the move. This one, look, it's got a sell set up, and let's look at the weekly time frame. So you got to watch out here. Watch out for what? You see a daily chart that's been trending down, and it's forming a little reversal at an area of resistance. It's still above the 200. And see this 20 MA? You see the 20 MA there. The 20 MA is equal to the 100 MA on the daily chart. Moving averages, these four become a self-fulfilling prophecy. These are the ones institutions are looking at. And they're looking on stocks, they're looking at simple ones, not exponential. And so as it comes down there, they use that as a reference point where they might want to buy. And you can see that's where this turn happened. And uptrend, pullback, starting to flip up. Now, it's at resistance and a flat 50 MA. I think this is going to continue to go higher, especially in light of oil moving up. That helps this. Now, I'm got to wait till 4, see what this is going to close. I don't like it at a 50 MA and this price resistance, so I'm just going to let it go for tonight. I'm going to see if it starts moving, if it takes out that high tomorrow, what it's going to do. It's not the cleanest alignment of daily and weekly. That one's already on the move. It looks great. This one, pretty good. This is more oil and gas, Apache. I think that can go up. The weekly's in our time frame. So this is one, we looked at something, like one of the slides was just like this. Not exactly, but I showed you a bottoming tail in context. Had a power move. It's extended. They always get extended when they have power moves from consolidations. Now the moving averages are flat. Now I'd like to have a correction bar. It did take out the low. But this is getting ready. It should go higher. Right? It's near new all-time highs. With oil going up, odds are this is going to go up. So as we look through different ones, this one's showing relative weakness. Not interested. Not interested. Now this one here, you know what I'm going to do? I'm so glad you asked me to stay. I would have been doing this later. Buy setup on the weekly time frame. Pullback. It started with a big, giant, wide range bar down. It bounced off of the 200 on earnings. I'm going to set an alert on this up here to see if it negates this red bar, to get a red bar ignored. It's still below the 50, but the sector and the price of oil is in the favor of this going up. Earnings are in July. They were reported here, so we're clear there. Not bad. I think this can continue to go up. Weekly's in an uptrend. So energy is in favor. Of course, with oil continuing to go higher. Now, what else might be doing well? Auto and truck dealerships. They're green on the day. They're up 8% almost. And on the week, and it's got a wide range bar. And there's volume. Aha. Do you think this would help you find opportunities? Let's look at some. See, this gap down on, this is how a bottom starts. It gapped down on earnings and it recovered. It needs to marinate more. It's not ready. That one gapped up. When you see this, that's institutions. They're going to come. They're going to keep buying this. It's right at resistance, so it's not time. But I'm going to just put it in an interest list by flagging it. No interest whatsoever with this. Right? I don't know whatever they're selling, but it's not liked. And you've got gapping up on earnings. So there are stocks within this sector. This is kind of flagging. Carvana. I'm going to send an alert above the high. This one is consolidated. Oh, this is cars.com. I was thinking there's another car that's in the that short squeeze that happened over the last month or so. Car, it's in the transportation index, but that's holding up relatively well in light of it being at resistance and a 200 MA. And so we're back there. So this is the process that we go through to find opportunities. Gold is out of favor. Home construction, it broke down. This was in my ETF letter, and I'm sure I got stopped out today, but we were holding this. I know some sold it right into that 200, but this is related to, this is the intermarket analysis part. Interest rates started moving up, and this is what is jiggling the market. Interest rates are moving up, and oil is moving up, and that's inflation. And, that's not good for the markets. So correction mode, and we'll see how this evolves in the coming days. Qs holding up great. For the Magnificent Seven are going to be reporting after the close today. We'll see which way this is going to be moving. And what else? else we could look at with you here? Spiders holding up relatively well. Those lines on my chart are options expiration when they occur. There's often turning points on options expirations.